I can start, right?
Yes.
Well, yes, TCS is coming under pressure and is dragging down the entire IT pack with it, and the reason is there is quite a bit of disappointment when it comes to the margin profile as well as the leading indicator of growth, which is your deal pipeline as well as headcount addition. They have been a bit tepid. As a result of all of this, the brokerages have cut their targets anywhere between 0 to 4%, and we are seeing quite a bit of downgrades coming in from the brokerages as well. First up, as far as number is concerned, the operating margins came in at 23.1%, much below our expectation, and the deal win at $8.2 billion was also quite lower than the $11 billion that they did last quarter. Similarly, when it comes to the headcount addition, this time number was around 14,000. Remember, last quarter they had added almost 35,000 people, and this has led the street to be a tad bit worried about the demand environment. However, having said all of that, we spoke with the management earlier in the day. They are quite confident that there is no problem with respect to achieving a double-digit revenue growth in FY23, as well as so far they haven't heard anything from the clients to discuss any rollback of IT spend. So at least that's the key positive coming in. On margin front, the management did say that this time around there was the impact of subcontracting costs as well as wage hikes, but going forward, anecdotally, they have seen that the loss of margins in Q1 is clawed back in the rest of the year, and 25% margin is something that they're quite positive about. In terms of the brokerage commentary, however, we have seen Credit Suisse, for instance, downgrade the stock to a neutral now. They've cut the target price from all the way 4,300 rupees to now 3,200 thereabouts, and other brokerages like Nomura as well as HSBC too have cut down their targets. In fact, UBS, for instance, believes that in the near term the stock will continue to be under pressure because as it is, it trades at a relative premium to its peers, and given the fact it hasn't declined as much as rest of the peers this year, there is that bit of scope on the downside. Overall, a bit of muted set coming in from TCS this time around, and it seems to have soured the mood for the entire IT pack.